Earnings season is underway. We're back doing earnings reaction videos. Today I have 3 for you. AT&T, American Express, and Taiwan Semiconductor. So we're going to go through them. We're going to go through what they did. We're going to go through their press releases. And for one of these, I still haven't decided yet. Let's see what we pay for it. So first one, AT&T. Earnings per share came in 60 cents, beating expectations of 58 cents. Revenue came in at $30.1 billion, missing $30.24 billion. And you can see this has been a dramatic price reaction. And I'll tell you what, guys, this is a big price reaction for what I consider a dinosaur stock. It doesn't really move very much. You can see here, going back to, let's say 1996. You really just draw a line across here. It's pretty much where we're sitting right now at about $17. The high was up here somewhere around $35 max, but mostly it kind of just sat right in here around this $25 range. Really doesn't move very much, and that's why I consider it a dinosaur. That's why a lot of people that have a dividend account and just love to collect that dividend love AT&T, because the price doesn't move much. There's not very much fluctuation, and you can collect yourself a 5.6% dividend. It's been upward of 8% over the last couple of years. So I'm looking at this for the first time with you guys. Let's see what we have here. So they already did their earnings call. That was at 8:30 this morning. 424,000 postpaid phone net adds, 11 straight quarters with 400,000 net adds. I like that. AT&T, for me, they got too big for their own britches. They started diversifying into everywhere they could go, and they were taking massive losses. The DirecTV deal, that was a big loss. They were just getting too big for their own good, trying to spread their tentacles too far in too many places. I like that they've come back. I like that they've just focused on their core business, and now that they're focusing on it, it's working. 11 straight quarters of 400,000 net adds per quarter. That's awesome. Fiber. 272,000 AT&T fiber net adds, 13 quarters with 200,000 plus. Fiber is going to be a big thing for them. Lightning fast internet, for those of you that have it, I'm very jealous of you. I don't have it in my area yet. Let's see what else we have here. Mid-band 5G spectrum covering more than 160 million people. That's great. Let's see what else we have. Let's get into some numbers. Let's see. Cash from operations, operating activities of $6.7 billion. CapEx, $4.3 billion. We'll see what that is in relation to in a little bit. Now let's see their forward guidance. Okay, because that's going to be interesting, especially in this environment we're in. Not only that, but this earnings season has not been as good as I was expecting it to be. I thought we were going to be seeing a little bit better earnings. They've been pretty lackluster. We're not having these dramatic beats that we've seen in the past. Let's see if they wrote about it in here. Maybe they didn't write about it in here. Okay, well, I think, if I had to guess, based on this, people are not liking their forward guidance. But the big thing for me with AT&T is they did that big spinoff. And for me, you need to be patient. You need to be patient because this big drop in revenue, something to do with the spinoff, but not only that, let's look at the 8 pillars real quick. This debt is outrageous. Now, the good thing going for AT&T is that if you look at Verizon and T-Mobile, kind of in the same boat. This is kind of an industry-based thing, but this is an insane amount of debt. I don't like that they have that much debt and they're paying that big of a dividend. Just doesn't make sense to me. Let's see what they're doing with their shares. They're buying back, well, they are buying back shares. This was probably, I don't know what that was. That probably had to do with an acquisition. Let's see. I wonder if that was the DirecTV acquisition or something. Let's see. Yeah, so in 2018, they did a $41 billion acquisition. That was a big one. They've since wrote a lot of that down, spun off into Warner Brothers. So for me, AT&T is a pass, even though I'm seeing a 9% drop today. And yes, if we were to run it through Stock Analyzer tool, I am sure this would be getting a lot of green on our what to pay for it. But for me, there's a lot of unknowns. And we're not doing Warner Brothers in this video, but for Warner Brothers, it's the same thing. It's a lot of unknowns. I want to see more quarters of data before I make a decision on that. Next one, American Express. Earnings per share, big miss here. $2.40 versus $2.66. Revenue, $14.28 billion, beating $13.98 billion. Let's see what the stock price is doing. It's down 4%, just about 4%. Let's see what they said in their report. So American Express first quarter revenue increased 22% to a record of $14.3 billion, primarily due to strong card member spending. Now, that's great for American Express right here. But obviously it triggers in me saying, okay, now you have to think about what's happening in the economy. Is this because people actually have cash, or is it because they're so cash strapped now that they're relying on credit card debt? It's just something that I think about. I don't know the answer to that, but it's something to think about. First quarter earnings came in at $2.40. Let's see here. Wow, look at that jump in revenue. Revenues net of interest expense right here, 14.28 versus 11.73. That was in the same quarter ending in 2022. Let's see what else we have. I'm reading this for the first time with you guys. Revenue grew 22% from a year earlier. Card spending was out of control. Travel and entertainment spending was particularly robust, growing 39%. Wow. Let's see what else we have. Oh, in March, we saw record levels. So those of you that don't know, there's an app out there called Resi, just like OpenTable, something like that. It's run by American Express. You do get some types of discounts. You get, if you have like the Platinum card or something, you get preferred. They save seats for you inside the restaurant or whatnot. So just a little pro tip for you. Resi is pretty good. Let's see, American Express. Consolidated expenses were $11.1 billion, up 22%. Okay. The increase primarily reflected higher customer engagement costs driven by higher network volumes and increased use of travel-related benefits. Travel is back. I actually used American Express Travel for the first time in this previous quarter, so it was pretty useful. I think that they have pretty good customer service. I find there are some better ones out there, but not bad. Not bad. Definitely getting better than it was in the past. International card services in the first quarter reported pre-tax income of $189 million compared with pre-tax income of $244 million a year ago. Results for this segment were impacted by the strength of the U.S. dollar. Okay, let's see if we have any forward guidance in here. No forward guidance. So again, that's one where you listen to the earnings call, unless it's down here at the bottom. Let me keep scrolling. Quarter one results. Okay, so that's something that you're going to want to listen for in the earnings call if you're interested in it. But let's go back to American Express and check out the 8 pillars. So because it's a credit card company and the way that they do things, it's hard to calculate ROIC. It's hard to calculate debt. That's the very difficult part about companies like this, Discover Financials, Visa, etc. Before I continue on, guys, we do reactions videos like this. We're going to have, next week is going to be jam-packed. We have Google, Microsoft, Apple's actually the following week. We are always looking at these types of companies and their dramatic reactions to earnings. So subscribe to the channel. You're going to enjoy them. Repetition. The stuff that I'm going through, it's just repetition. I don't necessarily care that this is up or down 3 or 4% today. AT&T's, it could be up 9%. I'm happy it's down 9% because I want to buy these types of stocks at much cheaper prices. We're going to run through a stock analyzer in a little bit, see what price we pay for something. But the point of this is the repetition. Go through it over and over and over. This will make a lot more sense to you if you're new. So don't get flustered if you're seeing something that you don't understand. All right, so they do pay a dividend. Gross profit margin is 100%. Okay, let's see. Now here's the thing. Here's the tough part about companies like this. You have a market cap of call it 120 billion. You come down here and you have an enterprise value of just about 289 billion. Difference is the debt. That's what makes this a very difficult company to look at for me. They are the luxury brand of credit cards. They have that going for them. But understanding actually what money comes in, what money comes out, etc., is something very important if you are going to start looking into credit card companies like them. Let's see what the analysts say going forward for AMEX. Okay, not a lot of earnings growth. I would expect a lot more. And on the revenue side, that's pretty bad. I mean, I was expecting... It's probably mid-single digits. I was honestly expecting a little bit more. But you notice, going out to 2026 here, there's only 2 analysts left. Why? Because I think we're in a very uncertain market. and they don't want to put their neck on the line. And frankly, they have career risk, and I don't blame them. Last one, Taiwan Semiconductors. Only one that's up today. Only one that's up today out of the three that we're doing. They reported $1.31 versus an expectation of $1.21. That's a beat on the earnings per share side. And on the revenue side, we have a miss. 16.4 versus 17 billion. Okay, but forward guidance, let's check it out. Let's go here. Taiwan Semiconductors announced consolidated revenue of 500, now this is in their currency, 508.3 billion net income. Okay. In US dollars, the first quarter revenue decreased 4.8% year over year and decreased 16.1% from the previous quarter. Gross margin for the quarter was 56.3%, operating margin was 45%, net profit margin was 40.7%. Now here's expectations for the second quarter. Revenues are expected to be between 15.2 and 16 billion. I wonder what Wall Street is expecting. Let's see here. Gross margins between 52 and 54, so that is a decrease because they hit 54, 56.3. Operating margin of 39.5 to 41.5, that's a decrease from this quarter. Interesting. Right. Net sales came in at better than the previous quarter a year ago. Gross profit better than the previous quarter. So, I mean, they had a pretty nice quarter outside of missing on their revenue expectation. Let's look at their 8 pillars. This is something that people are interested in, and I believe Warren Buffett is buying this one. Aside from free cash flow, we'll check that out. Everything else is green. What is their return on invested capital? That's a very high return on invested capital. They pay a dividend of 9.33 billion. Their 5-year average free cash flow is 9.83 billion. Let's look at the cash flow statement and just see what's going on there, because I don't necessarily love that, but if there's some type of change, big drastic change, oh yeah, I don't like that. So their 5-year average is 9.83 billion. That's with doing 17 billion in free cash flow last year. Was there anything that changed huge? Did they do some type of acquisition that I'm missing? No. So I would want to find out what exactly that change is. Let's see up here. That was lessened. There are 2 big changes here in working capital in the last 2 years, but I wouldn't expect a big jump like that out of nowhere unless I'm completely missing something right here. Other cash items, 15 billion. Aha. Probably something to do with this right here. Operating gains and okay. So there's something. This is where I would say go do more research. Pull out the 10K and start searching. It'll explain it to you very quickly, because I'm looking at this saying, all right, they pay a dividend of 9.33 billion. Their 5-year average free cash flow, including the $17 billion last year, was 9.83 billion. So you're basically taking all your free cash flow and giving it to investors. I don't think that's the most intelligent idea for them to do. Now, you can see previously, and why I'm concerned about that. Let's go back to 2016. 6.75 billion, 8 billion, 8.35, 5 billion, 9.96, 8.75, and they want to pay out 9.33 billion. They're not going to be able to afford that based on that. Now, based on this 1 year, they can, but what was that 1 year? Is it going to sustain itself around 17, and next year are we going to do 18 and 19 and 21 and so on and so forth? That's a question that needs to be answered. All right, so let's go look at Stock Analyzer and put a price on Taiwan Semiconductors. So revenue growth. You can see that in the last year, their revenue growth has been incredible. Absolutely incredible. That's a huge jump. So for me, I look at that and say, well, that's not sustainable. That's still factored into the 10-year number. There is a lot of growth in this industry, no doubt. So I'm going to come in here and I'm going to go low, middle, and high. I'm going to go 6, 9, and 12. 6 is probably very low, but let's get a range. All right, profit margin. Let's go with 30. Let's go with 36, 40, and 44. Say they crush it. Free cash flow is much lower. I'm going to go with 18, 21, and 24. PE, I will go 15, 17, and 19. If they can do 44% profit margin with 12% growth over the next decade, okay, I'll reward them with that type of PE. And for my return, I'm going to go 10, 12, and 14. That's my margin of safety. And why am I going so high on this end? Because this is high. All of these expectations are high. This side is very low. I could probably go lower than 10%, but I'm going to keep it at 10% for now. So let's analyze. Let's scroll down and see. So you're going to get a big range. Current price is about $90. 47 to 95 on your low end, 85 to 157 on your high end, and middle ground 64 to 123. Now it's a big range because we have such a big difference between profit margin and free cash flow. You can see it's on my watch list at 80. I think that's about right. So guys, subscribe to the channel. We're going to be doing these videos all week, all next week. Have a great day.